Hello, I'm Michelle Suskauer, and welcome back to Insure Wealth. There's an old and very true saying, look before you leap. Well, our expert insurance advisor, Howard Kaye, is here today to tell you to do just that. Hi, Howard. How are you?
Good, Michelle. It's good to be here again with you.
It's great to have you here.
Well, you know, today we're going to be discussing something that's very important. Look before you leap is very good advice. And I'd like to let you know what to look for. First of all, it's just plain smart to make it a regular event. A regular event of what? Reviewing existing life insurance policies every year, every couple of years, every 3 years if you need to. But if there is one thing that we can all count on, it is that circumstances and life change.
And that's for sure. I mean, we all know that what may have worked maybe 5 years ago, 10 years ago or more might not make as much sense now. So let's get started.
You're correct, Michelle. We're here today to really educate our viewers. And what I mean by that is share with you some ideas about existing policies that you may have purchased, whether it's 5, 10, 20, 50 years ago. The advantages and disadvantages about those life insurance policies. You know, what's strange is that when people get their investment brokerage statement or anything for that matter that they have put their money into, the first thing they do is they open that up and they review, and they probably call their broker, and they get a little concerned if things aren't going the right way.
There's no question. Absolutely. Monthly, just looking at it going, what is this? What is this?
Okay, Michelle. So we're here today to help you educate yourself about your current life insurance policy or policies, its advantages and its disadvantages. Remember something. You bought a policy, whether it was 5, 10, 15, 20 years ago, in some instances 50 years ago. But the question is, do you really review what you had purchased? You know, it's strange because most people receive their brokerage statement from their investment advisors or whatnot, and the first thing they do is they open that up and they make sure that everything is, you know, exactly the way they want it to be.
And if it's not, of course, right on the phone right away.
Absolutely. But let me ask you this. I'm sure you own life insurance in your family.
Yes.
You get the annual statement. Tell me what you do with it.
Nothing.
Now, listen, you're no different than most people. Sure,
Right.
You open it, you take a look at it, but as far as you're concerned, you think that I bought a policy, there was a premium to be paid, and I know what the death benefit is. So there's really nothing that I have to look at.
That's right, but that's not true.
That's not true. So typically what happens is people just throw that statement into the drawer or, of course, in the trash can.
The circular file, right?
Absolutely. But you need to really look at it because it's much more than just paying a premium and then filing the statement away until next year. You know, everybody goes each year for an examination, a medical checkup.
Right.
Well, why wouldn't you want a life insurance checkup? See what it is that you own, because there are so many things that most people do not understand about their existing insurance policy.
I mean, it's a great idea to do this, to do your annual checkup. So what do you do?
What do you do? Well, that's a very good question. So to the viewers, what is it that we do? Number one, what you want to ask your insurance professional is for a life insurance audit, an evaluation. Because again, on that statement, there's certain things that you're going to look at. Number one, the annual premium. Number two, the amount of death benefit that it purchased. Number three, what the cash values are. Number four, how long does your policy last? Also, the things that you want to know about are what was its purpose? What was the original intent of the policy? And are the reasons that you bought that policy still intact? Does it still make sense for your family, for your charity? What was that protection for? And a lot of times that gets lost in the whole picture because people forgot years ago. They haven't focused on it. And if you ask why is it, it's a very simple answer. Nobody wants to discuss their own mortality.
Right. But this is something that's going to happen to everyone. Everyone is going to die.
Correct.
And
well, I'm glad you said it, not me this time.
I know, and nobody wants to think about it, and it's true. And people, sometimes there's like this fear. You're going to talk about life insurance, and then guess what? You're going to die, okay? And that's not necessarily the case.
Absolutely. It is a fear. Many people believe that if they start talking about it, you're right, death is just around the corner. And of course, we're going to go when we're all supposed to go. Whether I buy a life insurance policy or review my life insurance policy has no bearing on when it is that we pass away. So let's get back to what kind of protection does your policy really give you? Is the death benefit still enough to meet your goals and your current needs? Remember, if this was 10 or 20 years ago, that life insurance amount that you purchased may not be enough to satisfy what you're looking to accomplish in today's money, in today's world.
I mean, this is really common sense information. Why wouldn't you review it? Because your life changes so much, because your situation, your financial situation changes, people that you may want to take care of, or charities that you may want to give your money to.
Well, I think there's a very simple answer to that. I think the reason is most insurance professionals, I don't believe, are doing the proper job, let's say, and of course I'm generalizing here.
Right.
But as far as staying in touch every year and providing the policy service that comes along with someone who purchased a life insurance policy, and if they're not on top of their clients in that manner, well, can you really leave it to the client to understand or make the proper decisions? No, because for the most part, it's gobbledygook to them. They get their annual statement. They look at the key things that they want to know. Yes, this is the premium I'm paying. Yes, this is the death benefit I'm paying. But they don't understand all of the other aspects of that policy, and this is why it doesn't become discussed.
Right, and because as someone like me, who's certainly not an insurance expert, someone needs some hand-holding,
Correct.
Some guidance.
So let's talk about what are the important things to find out. We've already discussed, yes, you should know what your cash surrender value of your policy is. We should also know, is that cash value enough to support the policy, the death benefit, for a long duration? What does this all mean? Well, we're going to get into some options after we review the actual policy. So before we get into that, and something that we call the life settlement market, which I know you're going to bring up, I want to first talk about what is it that people should be concerned about. Because in the end, somebody comes with a decision. Do I want to continue my policy? Do I want to get out of my policy? Do I want to change my policy? Do I want to sell my policy?
Okay.
Now, how are these decisions made? Well, the first thing is, like I said at the beginning of the show, many people think I pay my premium, I have a death benefit, it lasts forever.
Right.
But what is the real truth about that?
So wait, so it doesn't last forever?
Well, it depends what type of insurance we're talking about. There's
Okay.
term insurance, and this is where when you're younger, someone buys a policy, typically for their spouse, for their children. God forbid they predecease everyone, and they do it when the kids are young and it's a new family.
Okay.
In that case, they may have a 10-year, or a 15-year, or a 20-year term policy.
Okay, so now what does that mean?
Now, what that means is the premium that they pay is for that specified death benefit, and the policy will last for that period of time, 10, 15, or 20 years. And there's really nothing to review other than I need more insurance or I need less insurance.
Okay, so let's say somebody buys a term of 10 years and they live for that 10 years, they don't die during that 10 years, then what happens
The
to the
policy
policy?
is over, and now they can either buy a new policy for another period of time, or they can actually convert that into what we call a universal life policy, and this is the type of policy that goes forever.
Okay.
But let's move away from term for a moment. Now let's talk about the people who have bought life insurance policies for estate planning purposes, for example.
Okay.
Now, in this case, I'll give you a situation where a couple had bought a policy 20 years ago. It was a $1 million life insurance policy. They were supposed to pay $12,000 a year over their lifetime.
Okay.
Now, since that time, they've built a nice cash value, and there's somewhere in the neighborhood of $200,000 of cash in this particular policy. They say to me, there's really nothing to review. We're all set, Howard. And I said, are you really? Do you know what you're looking for in your policy? And again, the same statement being made. Well, sure, we pay our premium, we have our death benefit.
Right.
Well, do you really? Have you looked at what we call in-force illustrations?
What's in-force illustrations?
As did they ask me that question as well. And this is where you call the insurance company, and you can get a current snapshot on how your policy is presently performing, and assuming the assumptions that exist today, how will it perform going forward.
Okay.
So when I discussed this with these people, I said some of the things that can occur are the following. Your policy may not last to 100. You see, when the policy was purchased, interest rates were much higher.
Okay.
And their policy was predicated on a certain interest assumption. Back 20 years ago, it was up at 9%, I believe, from what they told me. Well, now that policy is paying 5%. Well, what happens if you're scheduled to pay a certain amount of money for a policy to last forever with an assumption of a high interest rate?
And now the interest rate goes down.
But interest rates go down. Something's got to give.
Right. So what's the change?
So what gives? Well, since they're still paying the same premium for the same death benefit, now the policy will last a shorter period of time.
And this couple in this example wouldn't be told this information?
Well, not if they're not having annual reviews with their agent.
But this is so important.
Yes, it's important. So what would happen in this case? Well, we looked at their illustration. It showed that their policy lasted through their ages of 91. Now, if they're comfortable with the thought that we won't be here at 91, then there's nothing to worry about.
Right, I
the
guess.
Insurance will be paid out. But, well, you know, Aunt so-and-so lived to 102, my mother was 105. And there are people that say, no, I'm going to live beyond 100. Well, what do you do in that case?
Right.
In this example, they have to pay more money into the policy to make it last longer.
Wow.
Now, there's nothing wrong with that. Things change over time. But unless you're aware of the changes that can occur in your policy, that's why it's so important to look for a policy audit.
Right.
Whether it's with your own professional or a new insurance person, whoever it may be. Have your policy reviewed and see if it's the best. Some other options. What if we find that the policy doesn't last as long? There are many situations where even though people are older today, they can actually take their cash value from their existing policy. So I'll give you the example with these people.
Okay.
They had $200,000 of cash surrender value.
So what could they do with that?
They were paying $12,000 a year. They were able to move the $200,000 into another insurance company after they had gone through the medical exams and so on, and pay the same $12,000 a year, but instead of their policy lasting through age 91, they were actually guaranteed to last forever. So the bottom line was that they were able to correct their situation. But had they never gone through the review, they wouldn't have known that there was a situation.
They never would have known. I mean, this is just, especially when you make, that type of a contribution for something so important as life insurance, to not have that yearly review seems almost negligent. It really does.
Absolutely. So that's one aspect of what a review will show to somebody.
Howard, I heard of people selling their policies. Can you do that? Can you sell your policies? And what happens when you do?
Well, that's an interesting approach and a completely different industry, something we call the life settlement industry, which I had mentioned earlier. Why I say it's an interesting approach and industry is because it's almost a conflict. Because I believe so heavily in life insurance and what it can do for a family, what it can do for charity, why would I be interested in having somebody sell their life insurance policy? And what does that mean to sell a life insurance policy?
And why would you do that?
Okay, so let's go through this. We've gone through the example of this, and we're going to stick with the same couple with their $1 million policy and their $200,000 of cash value. We saw that we were able to improve their situation by them moving into a new insurance company.
Okay.
What would a second option have been? The second option might be, they say, Howard, we understand now, but our situation has changed. We don't have the same need for the life insurance, or we don't have the money to put out and our children don't want to pay for it, or for whatever the reason is, we just don't want it.
So they want to sell it.
Well, first, what's their option? Their first option is to cancel the policy and take the surrender value of that policy.
Okay, now what does that mean, surrender value?
That means that cash surrender value, we said, was $200,000. They could walk away from the policy and take $200,000.
Okay.
What's the second option? Well, this is where we talk about life settlements. What are life settlements? There are financial institutions that will review your health history and, based on your age, determine what your life expectancy is. And if it fits their box, which they're looking for, typically people that have a 10-year expectancy or less, if it fits their box and they're able to pay you a sum of money that is greater than what your cash surrender value is, because obviously you wouldn't sell it if you didn't get more than the $200,000.
Well, of course, right. You need an incentive.
But if they could pay you more and still make those annual premium payments, at the end of the day, will it be a good return on their money when they receive the death benefit? So if a life settlement company were to offer this couple who had determined that they don't want to continue their policy, if they offered them $300,000 for argument's sake, now the couple has something to consider.
Right.
They might say, well, we don't want the policy. We'd love the 200, but someone's offering us 300,000. Yes, let's take that policy. Other situations that may occur, you may have had a survivorship policy, last to die, on two people. One of the spouses passed away. Right. And while it makes sense to keep that policy because now it only takes one more spouse to die for the death benefit to be paid out, the bottom line is, if, again, they don't want to continue the policy, that will increase the value of the policy because it was predicated on two people. Now we are down to one person. So that's where the life settlement industry may come in to a situation. But you only know by going through a review.
Okay. Now, there are a lot of important questions for policyholders to ask and get answers. So what should be on that checklist of things to look for?
Well, again, like we said before, I think the important things are performance. That's number one. How is my policy performing? Duration is part of performance. And then, of course, stability, the financial stability of the life insurance companies. You know, companies do change over time.
Absolutely.
That hasn't been a real issue for people, but the performance of their policy is. We showed you one example of duration, how someone's policy was supposed to last forever and now it went to only 91. Let me give you another example. Many years ago, our viewers, I am sure many of them had purchased policies where they were told that they only had to pay a premium for a certain number of years. And based on the dividend that the insurance company was paying to their policy, at the end of 10 years or 12 years, there'd be no more premium payments.
Okay.
But what happened? Well, over the past 20 years, we know interest rates have come down, dividends have come down. So just as that example that I used earlier, where if there's not as much money being put into the policy, it can't perform the same way, what happened with these type of policies?
So they would have to continue paying a premium when they thought that they weren't going to have to.
Exactly.
Okay.
And while this may be a complicated subject, this aspect of it, the viewers out there that are in this situation know exactly who I'm talking to. Because you at home may have been thinking, yes, that was me. I was only supposed to pay for 10 years. But then the insurance company says to me, you got to pay 2 more years. But it didn't end up being 2 years. It ended up being 5 years. It ended up being 8 years. Or it looks like it's continuing into the future. We have to pay for the rest of our lives. And that's where, again, a full review is done, seeing if you can possibly move into another policy whereby we can lower your premium or have you pay a shortened number of premiums as opposed to your existing policy that may require you to pay for a long period of time.
Again, that wasn't something that could ever be anticipated because people normally don't do a review. And so they don't know, they didn't read the fine print, which we're all guilty of not doing.
Well, yes, but there's another thing also. With all due respect to both parties, the insurance professional as well as the consumer, back in those days, if I go back 20 years ago, I'm sure there were plenty of insurance people that didn't properly explain a policy. And sometimes that's a function of the consumer who's just not interested or they're not grasping it.
They're not really listening. They sort of glossing over that fact.
Absolutely. On the other hand, there are professionals that absolutely went through every aspect of the policy, and now the consumer selectively remembers what they want to remember.
Okay.
So,
and we could all be guilty of that.
absolutely.
But again, those circumstances can happen and things change.
So the bottom line here is years have gone by, things in the economy have changed, things in your life have changed. So what are some other aspects to look at? We've gone through duration. We've discussed the amount or the number of premium payments needed to be made, where you originally thought it was a specified amount and it goes longer.
Right.
And we talked about how to move to another company and quite possibly reduce those number of payments. What other options are there? Well, we find with many of the much older policies, the old whole life policies, there's tremendous cash values in them. And I'll give you a very small example. Somebody who, when they were in their 20s, I think, bought a $100,000 policy, and now they're 75 years old. Well, the cash value in their policy is roughly $90,000.
Wow, okay.
The death benefit's $100,000. What does that really mean? You don't have to die to take the $90,000.
So take it.
Take it.
Right.
Now, there may be a tax.
All right, so let's talk about this. These are estate taxes or taxes?
No, income tax if they cancel.
Okay.
Why? Because everything that you receive over and above what you put in is subject to income tax. So there's a way to get around that, and that's what we call a 1035 tax-free exchange.
Okay.
Now, in this person's example that's now 75, they'd say, well, how could we possibly get a policy that's less money?
Right.
Well, it's very simple. You have $90,000 in cash, $100,000 in death benefit. We can take the $90,000 and move that to a new policy. Well, I'm giving you an actual situation that took place where we were able to purchase $175,000 of insurance with no more payments.
Okay, and that gets around that 1035?
No, in other words, that's the new policy,
Right.
but by doing a transfer, a 1035 tax-free exchange,
Oh, okay.
that gets around the tax.
Okay.
So now the bottom line was their $90,000 cash value, which supported a $100,000 policy, they're able to increase to $175,000.
And now they're getting more for the same premium.
Absolutely.
Okay, well that just makes perfect sense. Why
Whether
would they stay? Why would they stay?
won't.
Right.
But they don't know until they review. So whether it's small, or I can give you examples of very large situations where I was able to show somebody who had $10 million how to increase up to $16 million for the same amount of premiums. But they have to get the information in order to know what to do.
That's right. So again, really the big message here is the audit, is to review what you have, is to do your life insurance checkup, to do your physical. If you don't do your physical, you don't know if you're well, you don't know if you're sick.
Absolutely. Well,
Right.
people
You may
pretty
know
much
if you're
do.
sick.
Right.
Okay. But again, you don't know that you actually, what you really have until you review.
Right. And one other thing, forget switching policies for a moment. Has your situation changed with respect to ownership and beneficiary? Have you set up your policy properly? Plenty of people many years ago structured the policy where they owned it. But now they're at a point where their estate has grown, their net worth has grown, and they're subject to estate taxes. So what do they need to do? They need to change ownership of the policy to keep it estate tax free.
And there's a way to do that?
Absolutely.
Okay.
But again, if you don't go through a policy audit, there's no way that you're going to, or it won't even come to your mind. So that's why I say speak with your insurance professional. Speak with anyone you can, but get the right information so that you can really make sure that you have the proper answers, just like when you go to your attorney for your will, for your living trust, other things. Just like when you go to your investment professional and you look at your brokerage statements, you make sure you're on top of that. Same thing with life insurance.
That's right, because people can be complacent. They just think this is the way it's always been, and I'm going to be protected, or these are the expectations I have, and that's actually not the case.
Correct.
Okay. I want to talk to you about estate taxes, because I'm a little confused. I've heard people say the life insurance company can pay for estate taxes, or do they not pay for estate taxes? And I mean, how do you avoid getting sort of zinged by the government with estate taxes?
Well, many of these people that we're discussing today who will go through a policy audit had purchased life insurance to accommodate the estate taxes. So when we say let the life insurance company pay the estate tax for you, what we're really saying is effectively the insurance company pays it. But the truth of the matter is you're buying life insurance to create cash to accommodate the taxes that need to be paid. But as I mentioned just previously, if the ownership of that policy is not structured properly, you're actually adding more assets to your estate, which will result in more estate taxes. So you want to make sure that your policy has the proper ownership. You want to make sure that you have the proper beneficiaries in that policy, whether it be your children, your grandchildren. Also, there's situations that arise where when you bought a policy, there was one grandchild, but now there's 4 grandchildren.
Right.
How do you accommodate everything? Now maybe you want to set up a trust that incorporates any additional grandchildren to be beneficiaries of a policy. So many things to look at when it comes to this policy review.
And we didn't even touch on charities, and I know that we're going to definitely have time another day to talk about that, but the time has run out and has raced by.
Before we close, I just want to go over the last point, many things that people must look at. Remember, you have a life insurance policy, whether it's individual or a survivorship policy. I don't care when it is that you bought it, every year, take a look at that statement. Meet with your professional. Go over how the policy is performing, what the premiums are. Does the policy last longer than you plan to last? Is the death benefit sufficient? Is the ownership in proper order? These are the points to make sure are addressed, and with that, you'll always be on top of your policy.
Howard, it looks like we've run out of time again today. Thank you so very much. And today's message should be loud and clear for everyone. It makes sense, it certainly does to me, to periodically review your life insurance policy. Information available at 561-417-5883 or insurewealthtv.com. Once again, thank you so much, Howard.
Michelle, it was a pleasure being here, and I look forward to seeing you next week.
See you all again next Tuesday. So long.